ahead, ask me whatever you want.
Okay.
I'm going to be super relaxed. It's going to be fun for me.
Okay.
So don't worry.
Great. I'm not as planned as you.
You don't
your
need to be.
podcast. I just like will riff a little.
That's good.
Okay. Okay, Freya, tell me one.
Okay.
Should I look at the camera?
It can be sort of natural, right?
Yeah, it can be natural, like maybe at the beginning when she's just saying hi, but yeah.
Yeah, because you get yours, just for like some social clubs.
Okay.
Hi everyone, I am so excited to bring my friend and financial wizard, Amanda Hindlian, on my podcast today. Welcome, Amanda. Thank you for being here.
Thank you so much for having me, Dr. Devgan. I'm so excited to talk all things financial literacy and women and money and life.
I know, because you are the original financial girl boss. I have to tell everyone a little bit about you. So right now, you're the founder and CEO of Hindlian Advisory, LLC, and also the founder of the best new podcast, Straight to Why.
Thank you.
But you have this really amazing history. When I was reviewing your bio, I was shocked by how many hats you wear and how many roles you have had. I was super impressed that you were a Goldman Sachs partner and the COO of Global Investment Research. You were a senior strategic advisor. You are the global head of capital markets at the one and only New York Stock Exchange, and you oversaw its busiest year ever with $150 billion raised. And all of that in addition to being this amazing friend and wife and mom.
Thank you.
So I'm so impressed by everything you've built, and let's just take a moment to
It's
congratulate
mutual.
you.
No, it's mutual, because I look at what you've built and I think it's so impressive. Maybe that's why we get along. I just think it's awesome.
Okay, that's awesome. Well, you've done so many different things in the financial sector, and you've recently moved to Hindlian Advisory, LLC. So can you tell us a little bit about what you're currently doing?
Absolutely. Two things take up my time. One of them is, as you said, the Hindlian Advisory LLC business. So what I do there is a little unique. I'm essentially an operating partner for hire for different private equity, private real estate, private credit, and hybrid funds. So essentially, if you're looking to do a deal and you have capital that you want to invest, and you're looking at an entity that you think could be interesting for the providers of that capital, hopefully they're your investors, I can come in and take a look at the deal and say whether I think the deal makes sense or doesn't make sense and why. Is it overvalued? Does the growth trajectory make sense? Is it the right leadership team? How will the market value it at some point in the future? And so that, for me, was a very big transition from corporate life. My whole career, 25 years, I was in corporate America. And I didn't know I quite had the itch to do something entrepreneurial until I was doing something entrepreneurial, and I realized I loved it and I wanted to keep doing it.
How do you feel about being your own boss versus being part of a bigger company?
I think it's like mixed blessings. So I like being my own boss, period. Like, I like agency, I like having my own autonomy, I like the ability to reason things out in my own way. That said, it can be isolating. You can feel lonely. You know, I miss having colleagues. When I look back over the course of my career, I just have so many people who I've worked with who are still important parts of my life. And like, I'm not getting that in this chapter, but I'm getting something else. And it's just as rewarding, it's just different. Historically, with tons of colleagues and brilliant partners at Goldman, you're worried about something or thinking something through, you like knock on the door and say, I have a question, what do you think about this? And you get different people's perspectives. When you're on your own, you just don't get that same opportunity. But again, you get to be your own boss.
Yeah. So that's taking up what percentage of your time right now?
That's about half. And then actually, I shouldn't say that. It can be more, because if it gets really, really busy with deals, it can be 120% of my time.
You can alchemy more time. Yeah.
Pretty much. And then probably like 30% of my time I spent on my podcast called Straight to Why, which you mentioned at the outset. And that's like just a passion project of mine. I've wanted to have a podcast forever. Couldn't do it when I was inside of a corporation. It just wasn't my job. But the idea of storytelling, of being curious, of engaging with other people and learning from them and hearing their stories, their guidance, their wisdom, their insights, the lessons they've learned. In some ways, the podcast makes up for me not having colleagues. It gives me that outlet.
I love having a podcast because so much of business and entrepreneurship is self-promotional, which is great and important, and women should advocate for themselves, absolutely. But it's fun, isn't it? To
It's
just
so
shine
fun.
a light on someone else who is doing amazing things out there and adding to the conversation.
Totally, and you learn from every single person who you sit across from. And you know that there's something to be said for that. I learn something every single time I sit down.
And you've had really cool guests on the podcast. Tell us some of your, I know the answers to this, but tell us some of your best guests.
I can't pick a favorite because they're all my babies. I will say this, I am forever indebted to Samara Cohen of BlackRock because she's one of the most senior women on Wall Street, and we worked together at Goldman for years, and then she was my client when I was at Intercontinental Exchange. And she took a leap of faith when I called her up and I said, I'm going to start my own podcast. Would you come on and be my first episode? She didn't even hesitate. She did not even hesitate. And this is someone coming from a big corporate background, a really senior role. That's a gratitude, that like a debt that I feel towards her as a friend that I can't easily explain. Just how much she was willing to lean in and say, yes, I'm willing to do this for you, Amanda, and it's not a big deal. That really mattered to me. And then I've had so many other amazing, really special guests. You've come on. Yours hasn't aired yet, but it's going to be amazing. I've seen the footage. I don't think you have. Have you seen the footage?
No, I haven't seen it.
It's beautiful. It's going to be really good.
Okay, amazing.
There's so many sort of different topics that I've covered. I try to stick to kind of roughly percent finance and tech, and the other 50% anything that would broadly be considered health, wellness, lifestyle, consumerism type categories.
Amazing. Okay, let's rewind a little bit to you as a little girl. Did you have any idea that you were going to become one of the leading women on Wall Street? And when you were little or in middle school, high school, college, was finance part of your interest?
No, I had no idea, and no idea what I wanted to do when I grew up. I was driven by always in my life, sort of three things. The need to be continuously learning. So curiosity is just an absolute motivating factor.
Love that.
Number two, which is like the other side of that coin, I hate boredom. I don't ever want to be bored. I always want to be like moving and doing new things. And number three, I've always had a little bit of a sense of fearlessness. And I credit my mom with that. I'm not always sure how she made me so fearless or why she did, but there's one story that always kind of stands out for me with my mom. When I was little and I was in first grade, maybe I was in second grade, there was this boy who was just making so much fun of me on the playground. I had really, really curly hair, still do, and he was tugging on it, pulling on it, and one day I came home upset and I said something to my mom, like, this boy is really making fun of me. And she said to me, well, then tell him where he can shove it, in much less eloquent terms, okay? That's what you need to do, is tell him where he can shove it. And so I did. I went into school the next day. He started making fun of me on the playground. I told him the exact verbiage my mom used, inappropriate for this, what to do. And I was immediately called into the principal's office.
Oh my gosh.
And there I am. I'm sitting in the principal's office, and I said to the principal, well, this is what happened. He's been teasing me. He won't leave me alone. I've tried every other thing. And so I did what my mom asked me to do. And frankly, it seems to have worked because he ran away, really, really upset. So I feel okay. I get sent back to class, no consequences. Here's the thing. My mom taught me fearlessness in that moment, not because she handled the problem for me, but because she expected me to handle it myself. What I didn't know at the time was she had teed up support in the background. So she had called the principal that morning and said, this boy is bullying my daughter, handle it or she will. And so the principal knew something was coming, right? Like he had a heads up. But I think when your parent sort of says to you when you're that young, you've got this. Stand up for yourself, do what you need to do to protect yourself, say what you need to say. That embeds a sense of fearlessness in you. that I have carried with me throughout my career and that has served me, I think, really, really well. Now, fearlessness is not always being foolhardy, right? It's not taking unnecessary risks. It's more knowing that if you take the risks, if they don't go well, you can still handle whatever's next. Like, you've got it.
I think that's amazing, and it's something that we don't see as much in modern child rearing. We're both parents, and I think that our generation tends to solve our kids' problems for them.
Absolutely, I do it. I'm guilty of doing it.
I'm trying not to, but I am guilty as well.
Oh, I'm totally guilty of doing it. And I try not to as well, but it's so hard to stop yourself. And that's why I give my mom so much credit, because she knew that if I was going to really be able to stand on my own two legs my whole life, I needed a really strong backbone and I needed a northern compass. And she gave it to me by not being the one to show up, by telling me to do it.
How has the climate of women on Wall Street changed over the course of your career? Because we've made big strides in some ways and not so big strides in other ways, but I imagine you've seen quite a bit happen over time.
I have. When I started, and when you said like when you were a little girl, and what were you passionate about, and was finding it something you always wanted to do, I was drawn to the work and the caliber of the work, the challenge of the work, and my own natural curiosity, and again, that fear of boredom. But I mean, ultimately, at the end of the day, you have to also, I think, as a woman, be willing to say and own the fact that you are where you are because you deserve to be there. Not because somebody did you a favor because you're a woman, not because you got promoted because you're a woman, but you got hired because you're gonna do a good job and you deserve to be in the room. And I think more women need to feel that way about themselves. That's one of those shifts that I have not seen take place. I think women still don't necessarily feel or are made to feel like they fully belong or like they fully fit in. And for as much progress as I think we have made, we've reversed in other directions. And so to some extent, it's a little discouraging because you feel like, oh, we're making 78 cents on the dollar, now it's 81 cents, and then it goes back to 78. Because almost every couple of years, we decide what we want to reprioritize. And whenever the environment becomes more challenging, diversity, equity, and inclusion falls down the list of things that people are willing to prioritize. So it just keeps falling off of the slate of important things to do. And when it's not the priority and you're just using it as a talking piece when you don't really mean it, you're not going to really make up ground on the numbers. You have to really commit and be willing to make the changes that are required. I don't think Wall Street's done that, not remotely. And now I'm very pleased to see someone like Jane Fraser running Citigroup. I think that's amazing progress, like something to be lauded. But overall and across the board, I think Wall Street's done a pretty poor job.
Yeah. Medicine and surgery in particular are also such male-dominated fields,
Yeah.
and young women going into those fields, I think, are inevitably struck with this feeling of imposter syndrome that you're alluding to, where they wonder if they should be not in the boardroom in our case, but in the operating room, or in the places where decisions are being made. And that is a larger question, but do you have any insight into why women are still only making 78 to 80 cents on the dollar?
Yeah, I mean, I think there's a couple of reasons. So one of them is that women are either being directed into or are self-selecting some careers that just tend to pay less. So if you think about the medical field, for example, there are more female nurses than female doctors, right?
Right.
Okay, well, nurses tend to, on average, get paid less than doctors. So that would be sort of a non-comparable one-to-one, okay? Some of it is just career option self-sorting. The more worrying thing, because that's a question of agency and choice, and in that instance, I don't really worry as much about it. I worry more about women not communicating with each other about money. They don't talk to each other about it, so they don't know what anyone else is making. They don't know what they're worth. They don't know what to ask for. And then on top of it, they're sort of taught to be, and we all are, a little bit afraid of being seen as too aggressive or too tough because you're in the room asking for something that, well, you probably already should have gotten. and somehow you're in the room worried about asking for it. That for me is way more troubling. The other thing that's troubling is when women downshift themselves. So like they get to a point where they've been making 78 cents on the dollar, and all of a sudden there are either children in the picture or aging parents in the picture that require care. And if you're the partner in a relationship in a 2-income household and you're the one who's making on average 78 cents to your partner's dollar, you're the one who's more likely to have to stay home because you're making less money. You may not even cover the cost of childcare, depending on where you live or what your circumstances look like. So that becomes really concerning, because once women downshift themselves or are downshifted out of those surgical roles and they go into quieter roles, or they go work at home instead of being in the workplace because they're not making enough money to make it make sense. The math isn't mathing, as my kids like to say. That's where you start to get into some systemic problems.
Yeah. On that note, I see so many young women around me making devastating financial choices.
Really?
And part of it is a little bit of what you're talking about, where there is a self-selection. But part of it, I think, is that there's no financial literacy taught to young people. So I wanted to ask you, what are 3 important pieces of advice that you'd give a young person in college or right out of college to set themselves up for a financially healthy adulthood?
Okay, so great question. I'm going to start with the right out of college, financially healthy. One of the things I've seen happen, and you see it in the data, younger people view home ownership as being out of the realm of possibility, right? There's a housing shortage in the US. Housing prices are inflated because of that shortage. There isn't a lack of demand yet, so you also have heightened demand. Because of that, they're choosing to spend their money on experiences, on things that they can either play in, partake in, even if it's on a screen, it's an experience. Or they're willing to spend it on trips, which to me, that's got at least some form of a cultural advantage to it. But I think what young people fail to understand is that one of the most tax advantaged things in this country is home ownership. It is a key part of the American dream that was built into the ethos of America after World War II and into the 1960s. It is the epitome of Walt Disney. Like, this home ownership concept is Americana. And there's a whole new generation of people who don't feel that that's within their reach, and they're not saving for it. And fundamentally, that's going to be a problem for them, because there will be more housing supply that comes online. It might take a lot longer, it might take 5-10 more years, but there will be housing supply. And if you're the one who hasn't saved any money, you're not going to be able to put the down payment down on your home. You may not have the credit you need to get the financing you need for a home. And then you lose that tax advantage status of home ownership as well, and you're kind of behind the curve on that. So for me, for young people, save, guys, and save towards the idea of home ownership, okay? My second piece of advice is like the simplest thing in the world you can do, okay? You open up Claude. No other AI tool will do, okay? Just to be candid, I've tried them all. I've worked with them all.
All right.
Only Claude. And people can DM me on Straight to Why if they have any questions about exactly what the prompt is. But what you're gonna do is you're gonna say to Claude, please build me a time series-based financial model that includes 3 years of forward projections and 2 years of historical data. I want to track my income, my expenses, the rate of inflation, my investments, okay? And then you're gonna say to Claude, one last prompt. I want one tab in Excel, I want this in Excel, and I want one tab that's the assumption tab. The assumption tab is what I'm gonna fill in, okay? That's all of the data that I need to get. Claude is gonna take its time creating the model for you. It's gonna take 15-20 minutes, okay? So while Claude is creating the model for you, start pulling up your bank accounts. Start doing, if you're not sure where all of your credit card debt is, because some women don't know. They're not necessarily managing all of the finances. And I don't want them to feel ashamed for that. Like, this isn't a not a you don't do that thing. But you want to have visibility and transparency.
Absolutely.
More than advice, right? Like, at a certain point, you need the visibility and transparency more than anything else. One hack quick way to look at your debt picture is to run your own credit. You can do a quick credit check. You don't want to do that often because it does hurt your credit. But if you do it once, and just to get a sense of all of the debt balances you have outstanding, that's not going to do you any harm. That's going to be a really good thing for you to do. And then you just have to get a source of income, which would be in your checking account, right? Or a savings account, and then any retirement accounts that you have. You start filling in that spreadsheet carefully and slowly, and the model does all of the work for you. It'll tell you what you can spend and what you need to save. Because the number one thing people are talking about today as it relates to financial literacy is this notion of compounding, and they're calling it the eighth wonder of the world. All compounding is this idea that if you invest $100 and you make 10 off of that 100, and you now invest $110, that you'll make 11 off of the next chunk, right? And so every time you keep that money saved, the more it generates for you. Now that's obviously notwithstanding fluctuations in the markets, notwithstanding other, things that can happen that would change marks of an entity, or maybe a private entity, but in general, that is the fundamental idea. It is to save so that you can compound, so that your money works for you. Because do you know how everyone says quiet luxury is the thing? Quiet luxury.
Right, yeah.
No. Quiet wealth is the thing. And quiet wealth is quiet because people can't see it. It's not what you spend, it's what you don't spend. It's not the new car in the driveway, it's not the new handbag, it's not the vacation to the hottest spot. It's the money that you put away quietly when you took that thing out of your shopping cart and deleted it. It's the money that you put away quietly when you decided to buy the brand name item, and instead you went for something that the store makes themselves. You chose the store made instead of a brand name. Those are things that add up and really benefit you over time, but no one sees it. You're not keeping up with the Joneses. It's a quiet lifestyle. It's a quiet way of living. And it's actually the true luxury, because what it is freedom. You can turn down a job you don't want. You can fire the accountant you don't want. You can fire the husband if you don't want him, because you now have freedom. Freedom is about knowing your numbers.
That is amazing. I hope everyone pauses, rewinds, and listens to that again. I feel so empowered.
Oh, good. I want you to, because at the end of the day, it used to be hard to sit someone down and explain to them how to build the guardrails of a financial model that they can use. I don't have to teach you how to build the model anymore. AI will do that for you. I can literally just help you fill in some of the assumptions. Maybe if there's something wacky going on, I can help you take a look at it. But own your money. Know where it is, know where it's working for you, because the ability to close your eyes at night and go to bed with that cushion, that safety nest, the ability to walk away from a situation, a circumstance that doesn't suit you, that's quiet. No one sees you building that. You build that yourself, alone, quietly, carefully.
And what's the third piece of advice?
Very good question. Thank you for reminding me. This is for the older generation or anyone who has children. If you don't have an estate plan, the government does, and you won't like it. Okay? None of us wants to think about our death or plan for our death and what happens after we go. But it is not something you want to leave for your loved ones to handle. It's something that, even though it's icky and no one wants to have the conversation, tackle it. And you got to tackle it at least once every couple of years. You've got to go look at the documents again. You've got to have a will and an estate plan. Don't do that to your family.
Yeah, that makes a lot of sense. Just the idea of diagnosing where you are and making a plan, I think is so empowering, because there are so many people who are kind of flailing and just playing whack-a-mole with their financial decisions. And at every stage of the game, there's an opportunity to sort of pause, reassess, and do something different.
That's right. And I think, we can't be Pollyannish about the reality that you need a certain income threshold to live comfortably. And that income threshold varies depending on where you live and the cost of living. But once you get past those thresholds, so much of the determinant of comfort and freedom and happiness it's not about what you own. It's about the safety net that you have.
Yeah, it's interesting because not only with social media, but just the fast pace of change in the zeitgeist, I find that so many people of all ages are on this hedonic treadmill of purchasing. And more than ever, we are consuming so many disposable goods and just running through stuff as a society. The trend cycle is so fast. I remember,
It's so true.
I remember feeling this way when one of our big retailers, when we were at Sephora, and Sephora asked us for the skincare line, okay, what's next? Every month it was like, any new innovation.
You're like,
And
we
I
just
was
launched
like,
this.
I was like, science is built over the course of decades, not month to month. And the idea that people want to cycle through trends all the time, not just with skincare, but with clothing, purchases, trips, the latest Instagram frozen yogurt, it's overwhelming.
It really is. And again, like I see, I was traveling with some of my nieces and nephews who are like post-college, and the way they express that consumerism is like they'll wait in line for a coffee at a shop that was on TikTok, and they'll wait in line for 2 hours just for that cup of coffee. And I'm like, that is the most genius marketing, because that coffee shop is earning quite the return on a very, very marginally low investment, and there's nothing spectacular about the coffee. But that generation, for them, that's achievable. They can grasp it, they can pay for it, they can afford it, they can take a picture with it. It's an experience for them. That whole thing is an experience. The problem is that's a very temporary experience.
What should someone do if they're struggling with credit card debt? Because the average American bears something like $7,000 in credit card debt, and I think a lot of people feel totally buried by that.
Well, the first thing is be very cautious about getting yourself into that situation in the first place. Again, I'm not saying that from a point of judgment, but a lot of times when people find themselves in that place, they're on very high interest rate cards. So they're paying a lot on outstanding balances. So the first thing I tell people to do, go see if you can consolidate your credit card debt on one card with a lower balance with one provider, because the one balance, one provider, that allows you to have no excuse but to be responsible for that bill, right? That's the bill that you are responsible for every month. You are going to follow it and you're going to adhere to it. So I think that that's like the most important step, is see if you can consolidate to one card at a lower rate. Don't do it if you're going to pay fees, fines, and the rate isn't going to be lower. Now, the next thing is, in these days and times, everyone is constrained. The inflationary pressures have been real. The cost of wages have not gone up at the same rate as inflation. The job market has been okay, but it's been kind of uneven, and AI has led to quite a bit of uncertainty. So I think many people don't feel fully secure or safe, and I think they are running on credit card debt and other forms of consumer loans and debt. The only thing you can do, there's two things you can do: make more money or spend less money. Right? That's it. Those are the two things in the equation. Make more money, spend less money. The fastest thing is to spend less. The harder thing is to make more. But those are the two things in your equation. Right. So the first thing you do is start spending less. And even if it's that you're putting away an extra $100 a month and you see yourself writing down the principal on that credit card debt by $100 a month, don't freak yourself out by doing the math on how long it's going to take to pay it off. Just keep staying dedicated to it. Keep putting as much in as you can. Save, pay it down. Save, pay it down. Because again, right now that credit card is your owner. You're not free. The credit card debt owns you.
That's so amazing, because you really hit the nail on the head in terms of some of the important topics that people are thinking about. What is the most common mistake or mistakes that you see people of all ages making when it comes to thinking about financial health and financial literacy?
People just get intimidated by words they don't understand. And I tell people this all the time. Words are just words. They're language, they're vocabulary. And the same way when we were growing up, we had to learn what equal meant and what tantamount meant, and all of the different vocabulary words that we had to use, antonyms, synonyms. Finance is the same thing. There's just a bunch of words, and if you let the words keep you out, then you've done yourself the disservice and no one else has, because ultimately it's pretty easy nowadays to just look things up, especially with these chatbots. just go in and look it up if you have a question. It won't always be right. But there's a lot of access that people have at their fingertips now. I just generally see, so ever since I was 22 and I started working, I've kept my own financial model. That's where this idea came from. And I update it every week, and I look at every single thing in it, and I have a sense of where every dollar is, almost to like an unhealthy point. Like I really do know where every dollar is. But when I would go to other friends and women who would say, can you help me? Can you help me figure out how to save? I would say, here's my model, let me build it for you, and no one would do it. It just, even the idea of having a model was like too much or too scary. So I'm even trying to peel it back from that to say, forget the complicated model, like let the AI do all the work for you. Just don't let yourself be intimidated. Don't let yourself be ashamed. Don't let anyone guilt you into feeling a certain way about how you've managed your money. You have today to start over and to think differently about how you want to do it in the future. And every day you get to wake up and make that choice.
There are a startling number and percentage of women who have deferred all of their financial decision making to the men in their lives. Like maybe it started with their dad and extended to their husband. But I know so many successful, intelligent, brilliant, earning women who have work outside of the home, who don't have any idea what happens after the paycheck hits the bank account. What do you think has created a situation where so many women are so willing to defer financial decisions to their spouses, and what should we do about it?
I mean, I don't know about you, but I defer to my husband the things that I don't want to do. So, for example, I don't like carrying up dry cleaning. It's heavy and it hurts my back. So the doormen know it's my husband's problem. I'm not carrying it up. I don't love to cook, so my husband cooks. And, that I defer a lot of things that I don't like to do. In my view, a lot of women think that it's intimidating. And therefore, it's like, why would I want that headache? I have enough headaches. I have my job, I have the house, I have my kids, I have my friends, I have family that I take care of. Like, why would I also want to take care of the finances? If someone else is capable and able to do it, it's really easy to say, let the other person do it. And I think a lot of women find themselves in that situation in part because of the history of women not being as exposed to money and finance and wealth, and in part because of the history of us not being allowed to feel comfortable talking about it in this way, like where you and I can sit down and actually say, no, we're two successful women and we want to talk about money. It's important. A lot of these things are still changing and they're still evolving in our society. So we're not 100% yet where we need to be in terms of not being intimidated, in terms of understanding the vocabulary. And as women, we're really good at outsourcing things that we consider to be, not the best marginal use of our time. A lot of women have made that decision about money, and I hate to say it this bluntly, but that's the one decision you're wrong about, because money is that important. You can have conviction, you can believe what you want to believe, but you cannot outsource responsibility for your own money. Only you are responsible.
Because it represents freedom and the ability to make your own decisions.
That's right. And if you don't know what's going on with your money, you don't know whether you're free. You don't know whether you can walk away from a situation you don't like.
Yeah. How do you advise people to think about investment? So let's say a young person has figured out the model, they figured out what they can spend and save. How do you advise a young person to start to think about the concept of investment, and how do they do it?
The easiest thing to do to start is to just buy an ETF, an exchange traded fund, or some kind of an exchange traded product. I say that because they're inexpensive. They are broad representations of market categories or themes or things that you might find interesting. So like, let's say your oldest son said, I'm really interested in consumer goods. I mean, I could make whatever. I'm interested in biotech. Okay. Well, we can pull up a biotech index. In fact, Intercontinental Exchange had a huge biotech index that I oversaw. And he can take a certain amount of money, that whatever it is that he has earned or you've allowed him to have, and he can invest that, and he can see how the investment performs over time. And I think that's just the most basic, easiest starting point. It can be $100, it can be $500, it can be $1,000. It doesn't need to be crazy. You just want to get a young person to understand that money can work for you while you're sleeping. Money can work for you while you're sleeping. You just want them to see that. Because if they grasp that, then they've grasped the idea of compounding and they've grasped the importance of investing. That's the most important exposure you can give them. I feel like once children see that, they get it pretty quickly and they can be incentivized pretty quickly.
Are you incorporating some of those lessons for your own children?
I am. In fact, I have kid accounts for them where they have their own credit scores already. So they're responsible for like paying down their balances and they're building credit scores. Now we do it obviously because they're 12 and 8, but it's in their name and we show them what we're doing. So we want them to know, you have a credit balance. This is what it is. This is how we're paying it off this month. This is how much money your savings account earned. They'll have like an UTMA or custodian account. And then here's what we have in your investment accounts. And investment accounts don't need to be complicated. Fidelity has a great teen account program. Even people who don't work at Fidelity recommend their teen accounts. They get very, very high ratings. But most of the major shops that engage with retail consumers, a Vanguard, any of those shops, they're going to have a simple ETF that your child can purchase, and that way they can learn how money works, what investing is, and how it benefits them, importantly.
I want to switch gears for a second because you were at the New York Stock Exchange during the busiest year in the exchange's history, and you oversaw all of this excitement that was happening.
Yeah.
I wanted to ask you a little bit about what that was like and what is actually happening in that moment when you are managing that situation.
Well, it's really fun. It's very chaotic. The key thing before an IPO, right, is that you have the company itself, which is looking to raise capital in the public markets. That company, prior to the initial public offering, is going out and meeting with investors and trying to explain its story, right? This is why we think we can grow. This is what our revenue projections look like. Here's what we think we can do to help with our margins over time, our cash flow. These are markets we're looking to expand into. This is why our leadership team is the right team to undertake this exercise. There are all those sorts of questions. As they're meeting with those investors, the banks are gauging interest and demand from the investors. They're building a book in the background. That's investor demand. As they're gauging that investor demand, they're getting a better sense for what they can price the asset at, even though they've already started with a range. Is it $15 to $20 or is it 18 to 21? They've started there, but if they see a lot of demand and the company goes and talks to investors and investors are saying, we really want a lot of these shares, we want a large allocation, then the bankers are going to be able to price on the higher end of the range, and that helps the company raise more money. Now, the exchange, the regulators, lawyers, they're all worried about the infrastructure, right? They want to make sure the market integrity is in place, the ticker symbol is there, the disclosures are in place, the regulatory filings have been made, and that's a long, complicated, convoluted process. So occasionally you can have a situation where you expect a company to go public and you find out a day in advance that they're not. And one of the really fun parts, if you work at the New York Stock Exchange or a competitor entity, is that you have to fill 2 bells a day for every day of the trading week. So if you have a company that you think is going public on Thursday afternoon, you may not find out until Wednesday afternoon that they're not your bell the next day, and you've got to fill it. So that can be very who's coming in, how are we going to do this? There can be a lot of chaos and sort of machinations right up until the end. So it was one of the most exciting years from that perspective. And on top of it all, you had COVID. On top of it all, you had SPACs, which were a different form of investing vehicle that suddenly became really popular for a hot minute. And you had something called direct listings, which were a new form of going public. That was all happening in the same year. So it was just a wild, wild time. But I loved it. I enjoyed it. You know what it's like? It's like watching someone else have a baby. Because their company is the baby.
It's very exciting.
You're like so excited for them, right? It's
Right.
not your baby, but you're so excited for them. It's like that every day. You know, if it's your baby, the joy might be a little bit more heightened, but for someone else's baby, you're still really psyched for them.
What is your take on SpaceX right now?
I'm really worried about the equity markets overall, to be completely honest. But I've been worried for a while, so I've been wrong. And I like to be very honest about that because I've been worried for at least a year. And paring back on holdings and, calling my wealth manager and saying, I don't like this holding or that holding, or, because I just have felt for a while that there's a tremendous amount of government capital from excessive government spending all over the world flushing around the system. It's sitting in investment vehicles. The investments represent capital that's just going to continue to come into the markets and flood assets at higher prices than they're worth. At some point, that incremental dollar stops coming into the system, or it just slows. And if it just slows, that's enough to make it tippy. And if it tips, then you have a real problem, because right now you've got AI and some energy trades in the market, but you don't really have a lot more. And you know that there are signs of excessive capital awash in the system when tech stocks sell off 5% in one day, but consumer staples go up 4%. Because it just tells you that capital rotated out of one sector and into another. There was more money sitting there in dry powder that still had to be used. So in general, I'm nervous about the equity markets. So that's been my take. And I put SpaceX in that category of highly valued. Think Elon is brilliant and he's created tremendous things for this country, for the world. But I worry about, how sustainable it is, how sustainable the spending model is, and what this is going to look like for the next couple of years. I'm not someone who thinks, this is, the end of the world as we know it because of AI. It's not that. I think AI will have really positive effects and some negative effects. It's just more looking at the total dynamics in the market and feeling like something has to give. I've been doing this too long. It doesn't feel right. And you do, as women, I think in particular, have to pay attention to your intuition, because your intuition is just your body recognizing patterns more quickly than your brain does.
Oh, that's so interesting.
Right? So you listen to that.
Yeah, the little voice.
It's the little voice.
The little voice.
Women have a really powerful little voice.
Yeah.
My little voice isn't comfortable.
Okay, that's so interesting.
But it hasn't been.
So you've built a career in institutions that run on data and certainty, but you've also navigated an enormous amount of ambiguity because of new roles and new industries and kind of shaping your own career. All of that means that you've made such big decisions in these different roles. How do you make a big decision when you don't have complete information? And how does that vary depending on whether you're within an institution or outside of it?
It's a really good question. I think that the idea that you will ever have complete information is a fallacy. It just isn't going to happen, because to what you said earlier, the world is changing too quickly. The pace of adoption, the pace of innovation, the pace of change is so rapid. So I think, I think there's something there to be said about, like, you just are never going to know it all. So you have to listen to that inner voice, get comfortable with the fact that you aren't going to know everything, and make the best decision you can with the information you have, with a key caveat, okay? And the key caveat is that the more senior you get, and I think a lot of senior leaders fail to realize this, or maybe they do, but they don't recognize it fully. They are so shielded from information. Nobody wants to make them unhappy. Nobody wants to tell their boss bad news. They want to tell their boss what their boss wants to hear. But that's not actually in the best interests of anyone. And the boss actually needs to be fully open for information. So If you are the boss and you know you're not going to get full information, but you know you have to make a decision and you need to do it in a timely manner, the other factor you need to add into the equation is that there are people who are around you who are willing to tell you the truth and whose opinion you respect and value. Because if you don't have that, you have complete information isolation, and that's when leaders make really bad decisions.
Right there, when there's an echo chamber of a bunch of yes men telling
Exactly.
you exactly what you said to them.
Exactly. You're never going to have perfect information. You're going to have to make a leap of faith. You're going to have to know that. You're going to have to look for the people who are willing to tell you the truth. And then really, really importantly, and this is the one thing that everybody misses, when you're wrong, incorporate new information that says that you're wrong, so that if your thesis is wrong, you modify your thesis.
That's kind of, in short, the definition of science, which is we make the best decisions we can given the available information, and when the available information changes, we change the decision.
But think about economics. It's like science, right? Economics
Exactly.
is the same thing. That's all you're doing. You have a certain limited amount of information. To your point, you make the best decision you
And
can.
you pivot rapidly and iterate.
At Goldman, when we were learning, the sales and trading part of the business, one of the lines we were told by the leaders all the time was, the best traders are not the ones who make the biggest bets earliest. They're the ones who get out of the bad bets faster. So, you don't have to be the smartest, you have to be the most attuned.
And have the humility to say, okay, I'm wrong, I'm changing my mind.
100%. You have to know when you're wrong.
Yeah. Okay, this is so fun talking to you, but I have one last question for you.
Yes, ma'am.
What is the financial move, an action, a mindset shift, or a conversation that you want every woman listening to this to have this year?
Oh, this is easy. Have an uncomfortable conversation about money. Okay? I was raised, and I adore my mom. My mom is my why, she's my everything. But she taught me never to talk about money. It was just the thing that you didn't do, okay? And I understand how it can feel icky and uncomfortable, and you don't want to flaunt wealth, and you don't want to make people feel bad. You want to be really cognizant and careful of how you have these conversations. But I've started to really believe that the lack of dialogue between women has come at a real cost to us. And I mean that literally a real cost, like dollars and cents, not just lack of promotion, not just the glass ceiling proving to be really, really thick. I really fundamentally believe that we have not communicated enough with each other to give each other the grounding and facts to be their own best advocates. So have an uncomfortable conversation with a woman you trust about money. Do it this year. If it's icky, if you feel bad while you're doing it, just make sure you're not making the other person feel bad. If they're comfortable, you're doing the right thing. You're both going to learn something from it that is going to make you better. Because again, at most points in our life, we don't really need more guidance. We just need more visibility, more transparency, more knowledge, not necessarily to be told what to do, but to be given access to the information so that we can make the right decisions.
Thank you so much. I hope everyone listening to this feels so empowered by your words. You have done so many different things, all brilliantly, and advice from you is, worth every penny.
Oh, thank you, Doctor. I'm so honored to have been on your show.
Thank
I adore you.
I'm so happy that this worked out.
Me too.
Thanks.
Thank you. Did you get my little That was great.
That was so great. You should do some side gigs on this topic, just like financial literacy for women. And I know I was asking a lot about young women, but you should even do stuff like this for women our age, like mid-career, midlife, women and kids and all of that stuff.
Well, I'm thinking about it. I'm thinking about writing a book called NDA.